And now more than ever, because of this decision that people or has to do, and specifically business people, those who are interested in investing or whether or to lend money or to even those other entities, it's very important that they have the correct information, which are fairly stated and information that presents true and fair view of what it purports to represent. The reliability of information depends on the credibility of the source of the information and the ability to verify. It's very important to check the source. Um, just to give you an idea, just like last year, right? Um, Again, I'm keeping this discussion at this election because the question is what will be the source that is really um, reliable, right? Because in accounting, it's very important the source. Is it reliable? And not only reliable, how do you verify if the information is really reliable, right? How do you know that it is reliable? And how do you verify the accuracy or its fairness? And people avoid bias or misleading information because misinformation can lead to less effective decision, right? If you are using information that is coming from a questionable source and you don't have the ability to verify the information, most likely you will arrive at a wrong decision because your basis is not accurate. This is similar with when people base their decision on false information, and as you see, it's easy to edit videos and to bring false claims, and this is similar with this in business. We have people who are using the information like investors, creditors, the government, customers, and the employees, right? Investors, they are relying on the information whether to invest or not, while creditors, whether to lend money or not, or not only that, whether to allow the or supply goods to a certain entity on credit terms, because normally people companies will buy goods on terms. It means they will not be able to pay on cash on time, and creditors, those supplying the money, should decide whether to lend or not. And the government, whether to amend or retain the taxation rules and regulations correctly enforced. As the government sees what is happening with most of the companies in the Philippines, the government should decide what are the taxation that to be applied or whether to amend the existing laws, and customers whether to continue doing business with the company or to find another supplier. For customers, if you are producing something that is being used for production of another company, it is very important for the customers to know that you are reliable and they can buy from you in a good period of time, because if you are the only sole supplier for them for some, let's say, parts of the product they're making, they will be interested on how stable you are because their production relies on you if in case you will close or the company will close. So it will be a very bad for their company because you're the only supplier. So if they can see that you are not really financial stable based on your financial statement, then they will be able to look for another company who will be able to provide them the supply that they need. And this is similar with employees, whether to stay with the company or look for another company. They would have to understand the status of the company based on the financial statement. These decisions depend on the information that users see in the financial statement, the company's total asset, liabilities, net income, and net cash flow, etc. It's very important for people to see the assets. Asset is what the company have, as in even in normal situation wherein a lady is being courted by a guy or a man. Some ladies were practical, they would consider the assets, but it's not really enough that you know the assets. It's also important to know the liabilities, because some people, they have huge amount of assets, but they have bigger liabilities. So if you will compare the assets and the liabilities, if they have more liabilities, then it is not really actually good, because when you compare the, the net worth is negative and it's really bad. It's like selling all the assets and paying off of the liabilities. Still, you don't have the no, there is no assets anymore, and in fact, there is more liability, and also the net income. Without a good net income, without good sales, the company is bound to close. Whether even if they have huge assets and small liabilities, if it is not doing well, it is not being able to sell, then eventually it will close. Same with the cash flow. The company maybe have good assets and less liabilities. Maybe it's selling well, but with bad cash flow, eventually it will close. There is no sense of selling without being able to collect. It also depends on the analysis of ratios computed on information presented on financial statement. There are some ratios, like, for example, these acid test ratios and many other ratios that are being used by financial analysts to analyze the financial statement. It is not enough to look at the financial statement, but rather there are some formula or ratio that are being used to being able to analyze the financial statement better, like working capital ratio, turnover ratio, being able to know like how much the company is able to collect and how much working capital is remaining. Those are ratios that being used by the financial analysts to understand the situation of the company better. Most of the decisions of financial users involve significant amount of money. Thus, it is imperative that the information contained in the financial statement is reliable and fairly presented. As we say, it is fairly presented. It's possible that it is not 100% accurate. There will be some small errors, but what is important, it is fairly presented. Users do not generally have training or expertise to verify technical informations, such as this contained financial statements. That's why they turn to us when you become CPAs in the future, because some of these companies and the people involved, they do not have the expertise. That's why they turn to us to have guidance, and so that we can provide them assurance that they need, that information audited is fairly presented. That is why it is called assurance, because you're providing them the assurance that the information that they have is accurate. According to Webster, assurance means to give confidence or conviction. That is why I have attached, I think I have shared with you one news about To Go, when it was purchased by one company. And what happened, they employed a company, I think it was KPMG, to give an assurance audit. Unfortunately, later on, when it was already sold, it was audited by another company, I think Ernst and Young, and they found out that some of the figures, or like some of the amount on the financial statement, should be restated. And of course, many people blame the original auditing company who provided the initial assurance audit, because as you know, the company who invest or purchase a certain entity is basing its decision on the quality, or in the recommendation of the auditing firm that made the assurance audit. And if this assurance audit is not really done properly, or it was biased, then the investor will make a wrong decision. That's how it works. But it's very important to have a, you know, the recommendation should be accurate. It means the audit should be done properly. The nature and objective of assurance services are three-party contracts in which assurers such as the CPA reports to the quality of information. We are being employed. Normally, it's a three-party situation wherein we are the assurer. Okay, we are hired to do the audit normally by the person who is interested in the financial statement, and we have to report on the quality of information. It's very important to let the person who hire us regarding the quality of information, because if the information is quality is poor, then for sure we won't be able to provide a good recommendation. Assurance engagement performed by CPAs are intended to enhance the credibility of information about a subject matter, such as financial statement, by evaluating whether the subject matter conforms in all material specs with suitable criteria. And in the book, ABC Corporations prepares annual financial statement for its investors, creditors, or governments and other users. These users have doubts as to whether statements will meet their need for fairly stated information. By engaging the services of an independent CPA, the statement will be audited and checked against generally accepted accounting principles. A report signed by CPA will be attached to the statements. As you see here, these people who are users of financial statement, they have some doubt when it comes to the reliability of the information. Therefore, they will hire a CPA to do the audit. That is, it should be in accordance with GAAP or generally accepted accounting principles. And as you know, GAAP, the term GAAP is general, refers to the accounting principle that is applicable to a certain company in a certain place. For example, if you are in the Philippines and we are using the Philippine accounting standards or Philippine financial reporting standard, then the gap will then be based on the Philippine accounting standards. As we know, uh, in the United States, they're not using the IFRS, but however, instead they're using the accounting standards, American accounting standards. So therefore, the gap in America is different from the Philippines. Okay, and a report will be signed by the CPA will be attached to these statements. Users rely on audited financial statements because these statements have credibility. They be relied upon. As we are called certified public accountant, it means we certify the statements are, they can really rely upon these statements. The reports contain assurance that financial statements are fairly stated. It sets financial statement users free from the fear that will make wrong decisions because of wrong information. As I said, there should be a void of bias, because bias means it favors the for example, these are the investors uh, investing on something. Normally, when investors put their money in, there's already the existing owners of the company who are having control of the accountants. For example, you have your CEO or those original owners. They're the one giving salary to the accountants who are preparing the financial statement. Of course, if they want to keep their investors, they will, do something or do their best to make the financial look good. Okay, but by employing the services of an auditing firm to provide this assurance audit, the other users like the investors, are given a better view or more neutral view of the financial statement. That is the reason why they hired them. Okay, now what is the elements of assurance engagement? There are three party, always three party: the one who is doing the audit, which is the CPA, and the one who hired the CPA, which is the what they call the intended users, and then the responsible party. Okay, so for example, the company is being sold. The one selling the company, or the one who is interested to get an investment, that is the responsible party. Responsible meaning they are responsible in providing the financial statements and the information. Intended users means because they're the one to use the information, and then you are the CPA. And we have what we call the CPA is what we call the practitioner. The responsible party is the one preparing the statement, and then what are the there should be an appropriate subject matter. Um, the subject matter and subject matter information of an insurance engagement can take many forms, such as those shown in Table 5. When you see on page 7, you have the subject matter. Subject matter have different characteristics, including 3 degrees to which information about them is qualitative versus quantitative. So the Table 5, you will see like some of the informations are purely financial. The rest are some are non-financial, based on the performance of an entity, then the physical characteristic, capacity of a facility, and certain systems and processes, the IT, internal control and system behavior. Um, it's some businesses are very, they consider the IT system very important, because without an accurate, computer system, the information that is being generated is not really accurate. For example, for those like cinema, they base their sales on the bookings or on the sales that are made online. So, and you see whenever a customer purchase a ticket, it's being entered in a computer system. Without an accurate computer system, then the information is not really reliable. And some investors are really concerned with corporate governance and compliance with regulation, especially those who are involved, for example, with gambling and uh, other things which are involved human resource practices in other countries, where, like for example, Australia, that has been involved with slavery. Many companies are concerned that they are dealing with companies who have no rules on modern slavery practices. So they're making use that these companies they're dealing with are not involved with slavery. And I will be uploading another video for as a continuation of this topic. Thank you.